What's going on YouTube? Mike here, back again with another video on the Renegade Forex YouTube channel. And today I want to answer one of the most frequently asked questions that I get as a trader, and that is, what is smart money concepts in Forex trading? Also, I'm going to touch base on the second most asked question, and that is where to learn how to trade smart money concepts in Forex trading. So be sure to watch this whole video because it's going to be packed full of information on what exactly smart money is and how to trade it. So before we get started, make sure you subscribe to the channel and turn on notifications. I don't want you to miss any of the valuable content that I talk about on this channel. That's everything related to day trading, Forex trading, everything like that, and more specifically talking about smart money concepts. And so every week I do multiple videos talking about psychology, mindset, market structure, everything like that that we need to know in order to become a better trader. So I don't want you to miss that. Be sure to subscribe, and let's go ahead and get started with this video. So the most frequently asked question that I get is, what is smart money concepts in Forex trading? And the short answer to that is, we're using supply and demand on all time frames to follow what the market is doing. That's really it. It is that simple. However, it requires a bit of complexity to actually understand how that is happening and what is happening in order to form and frame a trade to take with smart money concepts. Okay. And so essentially, all we're doing is getting rid of all the indicators on our charts. We don't trade with any kind of indicators as smart money traders, as institutional traders. There's a difference. There's a very clear difference between retail strategies and smart money concepts. Retail strategies usually promote the use of one or multiple, even up to 5 or even 10 indicators that are overlaid on your trading view or your brokerage platform. And they offer you entries based on what your indicators are doing. Okay. So this is the key, like the most fundamental part or difference between the two. And retail strategies, they offer you an entry and use a lot of times an exit based on what indicators are doing. And those indicators are reacting to what price is doing. Okay. So you're using an indicator to reflect what the actual price action on a chart is or is doing to frame a trade around. And so you're relying on another tool and allowing that tool to cover up what is actually happening in price. Okay. And so as smart money concepts traders or institutional traders or supply and demand traders, whatever you want to refer to it as, we get rid of all of the indicators. We clear up our chart so that we can actually see what is happening live in the market on any time frame, on any instrument, and any chart that you could ever possibly look at. These concepts apply to any of those. So whether you trade crypto, Forex, indices, whatever, commodities, futures, it's all the same thing, and it's all happening on all time frames all the time. But we take those indicators off, and we are able to then analyze what is actually happening live in the market. Okay. And when we understand how smart money concepts works, and we understand market structure and the other things that I'm going to get into later in this video a little bit, we then are able to accurately predict as well as understand from a big picture overview what is happening and why the market is moving. Okay. So with retail strategies, and this is not bashing any strategy or anything like that, I'm just simply talking about from my experience and the main differences here. But with retail strategies, indicators give you a reason why to enter a trade. That doesn't necessarily give you the understanding of what is actually happening in the market and why it's happening. With smart money concepts and with refined supply and demand and institutional strategies, this entire concept of trading with naked charts, you have a more like a deeper understanding of what is actually happening on the chart, as well as why it's happening. Okay. So for me, that was really important for me when I was becoming, when I started my journey with trading, right? I needed to know why I was taking these trades, and no retail strategy that I searched for. I'm sure you're used to this, going through the cycle of looking for that magic indicator, looking for that magic strategy. That's just the one strategy that's going to be, 90% accurate with huge gains, blah, blah, blah. As you're going through that, none of those strategies explain why the market is moving the way that it is. Okay. And so smart money concepts as a whole, as the biggest picture that you can view this strategy and this concept, is it's explaining why the markets move the way they do. So from the very foundational beginning of understanding smart money concepts and understanding institutional trading, you're off to a better start because you understand why everything is happening. Once you understand why everything is happening, you can then understand where to place a trade. And you can then get signals to enter a trade based on your understanding what is happening live in the market. Okay. So we're removing the indicators, and then we're also understanding the actual foundation or like fundamental reasons why a market is moving the way that it's moving. And so within smart money concepts, there is three main concepts that we actually use to understand, first of all, understand fundamentally why the market is doing what it's doing, but then we also add in those concepts or those ideas to help us frame trades around. Okay. And so there's three different main ideas within this realm of institutional trading. And that's market structure, which is the most important foundational piece of the puzzle. And that's basically understanding the trends in markets and the trends on different time frames. And that will then allow us to usually accurately predict the direction that the market is going to head. Okay. So we understand why the market is going to move that way. And then we actually have the ability to understand the most likely direction or the most likely thing that's going to happen before the market does move that way. The second main concept is supply and demand. And so on every chart, on every time frame, on any financial instrument, there is supply and demand happening all the time. There's supply and demand everywhere on this chart that you're looking at on the screen. There's supply and demand on every chart, on every time frame that you've ever looked at. And so we use supply and demand in addition to market structure to understand usually our entry zones. Okay, so supply and demand comes into play with entries as well as trend continuations or reversals. And so supply and demand is a little bit less. It's almost equally as important as market structure, but without market structure, supply and demand is useless. Okay, so I'm labeling it as kind of the second most important concept within smart money concepts. And then the third most is liquidity. And we use liquidity for either our targets that we're aiming for, so weak highs or weak lows in the market, or we also use those for our supply and demand zones. And we look at supply and demand zones that take or sweep liquidity. And we also look at those for like I said, our entry points. So if we have lower lows, like this example right here, it swept this liquidity by this wick right here. So this wick down is a good indication that there was some form of liquidity right there. And price swept that and then it ran off like that. Okay. Now I'm not going to get into market structure and everything, why I would not be taking a trade from here going long from there. But to some degree, there was liquidity right there as well as a supply and demand zone. And that's as just a demand zone. Sorry. It's a demand zone right here. And that's what fueled this move up. Okay. And then it hit supply in this area here. And it also took the liquidity from this high and then is getting ready to run down. And so just those three things, market structure, supply and demand, and liquidity, are more than enough to become a consistent trader without using indicators and without using any type of retail strategy. We have that gives us a fundamental understanding of the market and why it's doing what it's doing. And then it also allows us to actually jump in and trade with the market and find very high risk to reward trades. So that's kind of the main concepts or the substructures within smart money concepts. And then as a added bonus to this, we can then use multiple time frames. We can then drop down to, okay, I'm looking at the 15-minute chart right here, but I can then drop down to the 5 minute in this area, and then the 1 minute, and then even down to the seconds chart if I want to. And I can try to capitalize on these moves right here that you see on higher time frames, but enter on lower time frames. And what that does is it then provides very high risk to reward setups. For myself personally, I don't target anything less than a 1 to 5 risk to reward trade. And if you don't know, if you're not familiar with risk to reward, I have quite a few other videos on the channel talking about that, so be sure to check those out. But essentially, very high reward trades and risking very little amounts. And so obviously, when you get consistent with that, you stand to make a lot more consistent and profitable gains than lower risk to reward strategies. And so I don't know about you, but when I was a retail trader, when I was first starting out my journey, looking back at the time, I didn't even know what risk to reward was. But looking back, the average risk to reward on every single strategy that I used was anywhere from a 1 to 1, and some of them were even negative risk to reward ratios. So you're risking 1 to gain like 0.5. But the majority of them were 1 to 1 risk to reward or 1 to 2 risk to reward. And so what that means is that if you win one trade and you gain 2, and then you lose 2 more trades, then you are right back to break even. But in smart money concepts, trading and refined supply and demand, and being an institutional trader, I teach my students, as well as I stick to this rule myself, that I only target anything that is at least a 1 to 5. And so what that means, just to touch base on that, is if I win one trade, I can then take 5 losses before I am back down to break even. Okay. And so with consistent accuracy, you then can set yourself substantially further ahead than the retail strategies that you were using. So that kind of leads me into, I guess I already kind of touched base on this, but one of the other pros of smart money concepts is high risk to reward. So we have just to recap on all those, we have, the fundamental understanding of what is happening in the market and why it's happening, more importantly. We then use supply and demand, market structure, and liquidity to frame trades, as well as continually understand what is happening in the market. And then as an added bonus, we drop down and use multiple timeframes for our entries to gain the edge of very high risk to reward trade setups. Okay. And so basically that in a nutshell is what smart money concepts is. It is, I'm not going to lie to you, it is a little bit more complex on an educational level when you're actually learning it. But once you understand it, now for me, this is just like speaking English, like talking about smart money concepts, framing a trade, and teaching other people has become just like me speaking English in this video. It's that easy for me because I've put the time in, put the work in, and I understand what's happening now, and I rely on this strategy to take trades and to trade consistently with this, because it's actually giving me all of these all the things I'm telling you today. You come into the market knowing those things without even knowing how to place a trade yet. And that puts you way ahead of any retail strategy and what they can tell you as to why the market is moving. Okay. So that leads me into my next couple of things. And basically, when you understand market mechanics and when you understand market structure and when you understand why the market is doing what it's doing, that allows you to really take your trading to the next level and become a trader rather than someone who is closer to gambling. So I don't know about you, but when I was trading retail strategies, and maybe you are a retail trader using some type of indicator-based strategy, it feels after a while more like gambling, and you actually start to question yourself, like, am I gambling here or am I trading? And using smart money concepts and learning to trade smart money concepts actually allows you to become a trader, not a gambler. And this is not, again, not bashing on anyone that uses a retail strategy. If you are profitable with retail strategies, then that's great, and it's amazing. But there are a lot of people who struggle with these concepts because on paper and doing the math for these retail strategies, everything lines up and you say, yeah, great, that's profitable. But then you run into issues with psychology. You run into issues with low risk to reward you run into issues with just being a new trader, and you're not going to naturally have the accuracy that you think you're or that you know you're supposed to have with retail strategies, because a lot of them rely on a very high strike rate in order to actually make money. So a lot of times retail strategies, they look for 70, 80, whatever percentage of a win rate, but then they also only offer 1 to 2 risk to reward. So unless you're actually maintaining 70, 80, whatever percent win rate, and you drop down to 40%, then you start to lose money pretty rapidly. Okay. And so that's why I have now become so happy and grateful and everything to have become a supply and demand trader, because it really fights against everything that I was struggling with as a retail trader. And so lastly, on this note, as we learn to transition out of retail trading into smart money concepts, we can then view retail trading a little bit closer to gambling, because you're just looking at odds. And this is simply what I'm trying to say with the gambling. I don't think any level of trading is gambling, but I'm just saying with retail trading strategies, you are closer to gambling than you are with smart money concepts. And that's because you are looking at just simply the odds. Okay. You know, when my indicator does this, there's a certain percentage that it's going to go into my favor. Okay. And that's just percentage based, odd based trading, where smart money and supply and demand and these concepts are, yes, they are still percentage based. Nothing is 100%, but you also have the added understanding of why it's doing what it's doing, and why the market moves in the way that it does. Where, like I've mentioned already a few times, retail trading strategies, they just tell you, okay, that my indicator is reacting off of price, and my indicator is telling me to do this. Okay. So hopefully that makes sense. Essentially, this gives you a huge edge in the market, and a huge upper hand compared to your old retail trading strategies. And if you're coming into trading without having gone through the retail cycle or the retail, journey, then congratulations. I wouldn't even look at any other indicators. I would just come into this with a clean slate. Like I wish I could have done. I wish that I could have just come directly into smart money without even messing with anything else. Because I just always wonder, to some degree, how much further along I would be on my journey. But that's maybe for a different video. And so, yeah, lastly, there's 2 more topics that I want to touch base on before we wrap up this video. And that's kind of a sub question that I get answered or get asked a lot, that is it complex to understand smart money concepts? Is it complex to use it and understand it? And yes and no. Okay. You can make trading as simple or as complicated as you want to make it. That's usually my initial answer. But it is complex when we start to throw in multi-time frame analysis and we drop from the 4-hour down to the 1 minute. Yes, that can get complex. Yes, that can be confusing. Yes, you can get lost in that. However, you don't have to do that. You don't have to drop down to lower time frames. You can just use 1 time frame. If you're more comfortable, you can just use 2 time frames, and you can see these same things happening on all time frames. So if you're someone who swing trades the 4-hour, you can use these concepts on just the 4-hour and not ever change timeframes again, and still do totally fine with your trading. If you're someone who wants to scalp, then you can just use 1 time frame, but it's going to be a little bit trickier for you're going to want to lean into using more time frames, I should say, but it can be done. And then if you're someone who has a deep understanding of multi-time frame analysis and everything, you can still use multiple time frames to increase your risk to reward. It's all dependent upon your level of understanding when you come into this, and also how complicated you want to make it and how much time you have to learn and invest into understanding these concepts in this topic. Okay. So yes and no, it is complex, but it also doesn't have to be. If you're just trading with pending orders and setting it and forgetting it, then there's many students that I have, many strategies or many parts of the strategy that I teach that just talk about setting it and forgetting it. And so the last thing I want to touch base on is where to learn how to trade smart money concepts. and that is through my course. That's what I would recommend. I'm actually in the process at the time of filming this video, which is March 29th, 2023. I am in the process of building a course. It's about 80% done. So hopefully by the time this actually gets out to people and people see it, that course will be done. Definitely check the links in the description below this video if you want to get more detailed information on that. But essentially, I teach everything that I just talked about in this video in very in-depth. We've got at least, right now, there's at least 80 videos that average anywhere from 15 minutes to 1 hour long videos. And those go super in-depth into all of the categories and all of the topics of smart money concepts. And my goal is to have people like you come in and be a consistently profitable and or funded trader within, I would say the average completion, like realistic, is going to be 3 to 6 months. And that is the goal that I have set up to help people like you become better traders. And I really do believe that my course is going to deliver that for you and as well as many other people. And so if you're interested in learning more about that, be sure to check the links in the description below this video, or you can go to renegadeforex.com and find more information on that. And so I want to leave this video here. This has been an overview video on what is smart money concepts in Forex and day trading, and also touching base on where to actually learn how to trade smart money concepts. So until the next video, be sure to subscribe, turn on your notifications, and we'll see you in the next one. Thanks for watching.